Right, good afternoon, everybody. This is Steve Griffiths here, developer of the MTP Predictor software program. If you could just let me all know whether you can hear me okay and whether you can see the chart stroke risk disclaimer okay, that'll be great. Just go to the left-hand side of your window there, and in the question and answers box, you should be able to see. Yeah, you should be able to see what's going on there. Right, so welcome to today's webinar. Let's start with the risk disclaimer and just remind you that all examples in this training room should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly, accept that losses can and will and do unfold. It doesn't matter what trading approach you take, there always will be losing trades. Right, let's pull this down. Let's have a look at some charts. See if I can get the questions coming in here. Right. Okay, this is a chart of gold. I thought I'd start with gold today and take a look at this. Just bear with me. I'm just trying to sort something out on my settings here for a second. So just trying to get something going here. Right, I can't quite see the questions very well, so we'll have to see how we get on. Right, so this is a chart of gold. We've been looking at gold and oil a little bit in the last few webinars. I thought we'd have another look at those today. This is July gold. Still trying to work out the questions here. Sorry about this. Trying to get this sorted here. Yeah, just bear with me for a second on this. Just myself on my housekeeping here, trying to get this sorted. Right. Anyway, so I can only see half the questions at the moment, so please bear with me on that. So anyway, this is a chart of gold. This is a slightly longer time frame, a 1 hourly chart on July gold. And you can see here, it's been really choppy sideways, hasn't it? Like this, really sort of horrible, going nowhere on the hourly time frame. But we take exactly the same approach to trading this, as if you are trading the shorter time frames or perhaps the E-minis. We go to the higher time frame chart. So this is the time frame I consider the higher time frame. We go back to previous pivots, swing highs or lows, and take our DPs off that. So if I go back in time a little bit here, if I go back to just before this low here, the market was coming down, this would be the previous low, wouldn't it? So we right mouse click, we do decision point. Can you see how that's on the chart in advance? This is what we do with MT Predictor. We don't blindly take all our trade setups as if it's a black box system. What we're trying to do with you guys is we're trying to get you to work in advance of the market. We're trying to get you to see when the picture's clear, because we know that basically markets are random about 50% of the time. And most amateur traders never really appreciate this, that basically half the time or slightly longer, markets are not in a tradable pattern because their higher time frame picture is not clear. So to try and get an idea on when the higher time frame picture is clear, we go to that higher time frame. We place our DPs on the chart. They're out there in advance. This is what I want to get you to do, to have these on the chart in advance as leading indicators. If we move forward in time now, can we see what happened with gold? It went down, but look where it made a reversal, right at this level here. And in fact, there's loads of times actually from previous highs and lows that gold has made reversals at the highs. Look, you see, caught the high, caught the low. Sometimes it doesn't, but sometimes it does. So now we go down to the shorter time frame. So what we're looking for now from an hourly chart is the higher time frame. The shorter time frame would be the 15-minute. So if we come down to the shorter time frame, look what happened here. Can you see how the market came down into the higher time frame support zone and gave us a VS or volume spike buy setup? In other words, we're having a shorter time frame trade setup at our higher time frame support. So here we'd, in fact, if I use training mode, just to go through this a little bit. By the way, this is our standalone version, but if you're using our TradingView scripts or NinjaTrader add-ons, the approach you take to the markets is exactly the same. How you actually place the analysis on is slightly different in our TradingView scripts, but the general approach to the the analysis is exactly the same. So this is what we're looking for. We're looking for when the market is making a good, clean, clear pattern. When it does, that's where we deem that the market pattern is clear. So can you see here how we had a shorter time frame buy setup at a higher time frame support? Right mouse click over the blue buy bar, do analysis. This would then give us a potential trade setup. Remember, we use position sizing. So when the losses come through, I don't say if, I say when, because there always will be losing trades. No matter what trading approach you take, there always will be losing trades. The losses are kept small, but if it gets up to the profit target, we're looking for profits that are large, not just in dollars, but in relation to the initial risks. Let's move forward one bar. It made an inside bar. It then made another blue buy bar. So what you could have done is actually you could have then come down and redone your analysis on that next blue buy bar if you wanted to. If you had have done, we then go forward and you'd have been taken into a long trade. If you hadn't have done and kept at the original level, again, you'd have been now taken into a long trade, definitely by this bar. Let's turn training mode off and see what happened. Market went up, retraced back down again. Now, this is why it's very important not to move your stop to break even too quickly. Okay, here's the 100% initial risk level. So it went through the 100% initial risk level here. So if you'd move your stop to break even here, you'd have been stopped out to break even before it then just shot up to the target where either a 4.4 hour profit was available, or if you'd had it at your lower level there, a 8-hour profit was available. Let's keep it at the lower one so we're just a little bit more conservative. But you see how very often on intraday charts, the markets will retrace back into your effectively entry zone before then going back in the original direction. Now, this is psychologically, this is really difficult to cope with. When you see a market move away from your level, it's all too easy to bring your stop to break even too quickly. So this is why I suggest you only really bring your stop to break even on intraday charts if you're unsure about the analysis. If there's something that's telling you that the analysis is not ideal or you're pushing the boundaries a bit. So when it is ideal like this, just be careful not to bring your stop to break even too quickly. The market then went up to the level where a 4.5 hour profit was available. But you see the approach we're taking, exactly as we're outlining week after week after week. The higher time frame, project your DPs, see whether the market reverses at those DPs, that then deems whether the market pattern is clear. Yeah, Sylvia, I think I can see what your question. I've got a panel that doesn't seem to be going away. That's halfway across my question, so I'm having to guess what your question is. So what's Sylvian actually says is, because we've gone sideways for a couple of bars after the VS setup, he's saying it's probably not ideal. You're right, actually, Sylvian, it's not absolutely perfect. So if you're a more conservative trader and you want the setup to be actually perfect, well, then you'd probably cancelled your order and not taken that one. It sometimes happens. If we look to crude oil, I was looking on an hourly chart on crude oil again. This is crude oil on a July contract. There's the previous low. If I do the DP off that, you can see it had 2 attempts to come in at this level. If I go down to the 15-minute chart, this was probably a slightly better VS setup, which is what you're looking for, isn't it, Sylvian? This is probably what you'd like a bit to happen a bit better, is that here we're at a VS buy setup again. So a 15-minute VS buy setup at a 60-minute chart. If I place the analysis on, it actually went with you straight away. So I think that's what you were saying, Sylvian. You'd actually like to see this for a VS setup rather than the previous one. And I'd probably tend to agree with you. So this is probably a better example of what we want to see with the VS setup, in that it goes with us straight away. Here it did go sideways for a few bars. So I probably picked the wrong example to show to start with. But what I was trying to just show was how to use the higher time frame, DP to start with, to then have the lower time frame setup coming in at the higher time frame support. So that's what I was trying to show in this. So perhaps rather than using this example that did go sideways for a couple of bars, if we use crude oil, does that make you a little bit happier in that we're doing exactly the same thing? Here's your 60-minute support. Here's the 50-minute VS setup. It took you in, then went with you straight away. So this is probably a better example. Actually, while we're on the crude oil example, you can see here crude oil did actually make quite a rally here. So the initial target on this VS setup was only a 3-hour profit. And this is where sometimes, if you're a bit more experienced, if we go back to the hourly chart, can you see how we've had quite a big move sort of down here? And this was only a very little last swing. Do you see that, Sylvian? So if you take the DP off that last swing there on the 60-minute, that's really, really close to your entry level. So if you're a bit more experienced, what you might want to do is look at this and think, well, that is almost a double bottom there, isn't it? Not quite, but almost a double bottom. So this swing here, which I'm showing, is probably the last move down into the low, because that's almost a double bottom. Not quite, but almost. So as a bit more of an experienced trader, you might want to say, well, actually, let's take the decision point from that level. Again, I'm on the high time frame chart for a target for your shorter term trade. So do you see what I'm doing? If I come back down to the 15-minute chart now, so rather than wanting to come out at that level, you could say, well, actually, I'd like to try and run that a bit further to my next higher time frame resistance level. And if you'd done that, that would have increased your profit up to a 10-hour profit. So that's a lot more respectable, isn't it, Sylvian? And of course, why would we want to do that? Well, we know that the VS setup is a professional fake out, don't we? We went through this a couple of weeks ago, where what we're looking for is we're looking for the market to make on this bar here, we're looking to make a wide range bar on high volume through an important psychological high or low. So this was perfect, wasn't it, Sylvian? It came down, it went through that low there. Your amateur traders will look to be selling. It then reversed back again, showing that the high volume in the previous bar was not selling. It was actually professionals buying. We know that professionals tend to move the market strongly in the opposite direction. So can you see why, when you have a swing like this, where your target is so close to the entry, that probably want to think that it's going to go a bit further, isn't it? In other words, the professionals aren't going to want to move the market just a small way. They're wanting to move it probably a bit further. So in this case, can you see the logic of how then you probably want to use the next decision point level out on the higher time frame to look to run your trade a bit further? So that would have increased your profit up to 10R, which was a very, very respectable trade. Now, of course, it's gone on further. Crude has actually gone further, but then it doesn't matter, does it? It doesn't matter, because you've already banked a 10R profit. You've already taken out a 10R profit in that swing. So it doesn't matter if the market goes beyond your level. We're not about forecasting the exact moves or where things are going. You just in the business here just to purely and simply make money and have small losses. So I think this is probably a better textbook example on using crude oil rather than the gold. But, can you see why I wanted to show that? And I think I wanted to look at that particularly because when you're on the hourly chart, that was a really choppy sideways period. So when it happens like that, when you get a choppy sideways range like this, very often you'll get the market just going out of the range like that, just as little fake outs, and very often it will reverse at your DPs really nicely. And when it does reverse your DPs very nicely, very often on the shorter time frame, then you can actually catch some nice trades. So that's another thing to probably to bear in mind. Even this wasn't an ideal entry, is that you can get some nice sort of springs between DPs. Sorry, I'm struggling with the questions at the moment. I can only see half a question. So I think you were saying on the crude oil, if you were going up to the 4-hourly chart. Were you saying that there was a really big support zone there as well on the 4-hourly chart? So if you were saying there was a big support zone on there, you're right as well. So that was yet another reason why there could be support coming at that low, and yet that was another reason why you'd probably get a bit more of a bigger move off that low as well. So yeah, you're exactly right on that. So well spotted. Right. So are there any questions on that so far? Again, I'm struggling because I can only literally see half a question, which is really hard work to try and guess what you guys are actually asking me. So what I'm going to do is I'm just going to take a quick picture of that so I can send it to support to make sure that they actually can help me solve why that was actually doing that. Right, let's have a look at some other examples. Let's perhaps go over to using our NinjaTrader add-ons. Where's one I want to look at? That's right. Let's have a look at the YM. Because I wanted to particularly to have a look at the YM on Friday, because there was another great example on Friday of exactly what we're looking for trade setups. And I want to come on to having a look at yesterday to see how, the good, the bad, and the ugly of trading. We don't always want to focus on the really good trades, do we? We want to have a look at some of the uglier ones and some of the ones that don't look quite so nice, to then have a look at how you can analyze those. So this is the YM on a 3-minute chart. So the higher time frame would be the 15-minute. Right. If I go back in time a bit, I hope you guys have all viewed the webinars that show you exactly which pivots to use for taking your DPs off. If you have, you'll know that as the market is rallying up like this here, we use the last swing into the high or low. Okay, so that's the last swing, isn't it? There's the low. That's the last swing into the low. So we right mouse click off this pivot. We do decision point. Bear with me for a second on that. I think there it is. I'm just going to use the typical one. That's on the chart in advance. You can see how we do exactly the same as we did on the gold and crude. As I go forward, look what happened on Friday. The market went up to this level and made a reversal absolutely perfectly. We then come down to the shorter time frame chart, which in this case would be the 3-minute. So on Friday, can you see how this worked out absolutely beautifully? And this is what we're looking for when you're new to MT Predictor. You need to be only focusing on the best trades. As you become more experienced, you can start to push the boundary a little bit more. And I'll look at that in a second when we see what happened yesterday. So can you see how this again was a perfect example? By the way, this is a regular trading hours on the E-minis from 9:30 to 16:15. So that's why we have a gap on the opening. So a perfect example, right up into the higher time frame resistance. Our market MTP trend went from blue to black to as the market rolled over, then went to red to show you the large degree trend was down. As it was down, we'd be looking for sell setups, wouldn't we? We wouldn't be looking for buy setups. We'd be just looking for sell setups. We had a TS1, W3 or wave 3 trade setup come here. Yeah, if you can send supporter an email on that question. I can't see who's asking that last question on the data. They'll be able to sort you out. So support@mtpredictor.com. So here's W3 or wave 3 trade setup. We right mouse click over the red sell bar. And our first target, bear with me for a second. My computer's a bit slow here because I've got quite a lot open. Remember, this is the end of a wave 2, so we're then looking to take profit at what would be the typical wave 3 WPT. And as you can see, the market went down perfectly, hit that target where a nice 5-hour profit was available. This is now a good example of what I mean by the markets then go random at times, because doing this part here, i.e. from here, when it made the reversal at the DP level, to here, it looked like everything was working perfectly, wasn't it? Start of our Elliott wave sequence, a wave 1 down, a wave 2 up, unfolded as an ABC, and then strong wave 3 down at the typical wave 3 WPT, a nice profit. You'd then expect the market to go up to make a wave 4. You then expect it to go down to make new lows. But it didn't do that. It went sideways and kept on going up. So this is why Elliott wave gets such a bad press, the way it's taught traditionally, is because it breaks down. It breaks down because markets go into the random phase. This is why I keep saying to you guys, half the times the markets are random. So of course, all we're looking to do here is we're looking to take a chunk out of the market when the picture's clear. Also notice how it went past the 100% initial risk level here, went back to your break-even level, in fact into a loss just ever so slightly, before turning around and going with you. So again, don't move your stock to break even too quickly. But then after this trade, it then turned random. In other words, the market pattern sort of broke down. If you had been looking at this, you may well have decided that you'd want to take this TS2 sell here because the MTP trend was still red. If you had have done, which would have been fine, that looked perfectly valid, because you're expecting this to go into a wave 5 down. You're expecting this to be a wave 4 retracement, a wave 5 down. You're expecting it to work out okay. But this time you'd have been taking into a short trade, you'd have been stopped out, and you'd have been stopped out for a loss. Whatever trading approach you take, there always will be losing trades. Losses can and will and do unfold. This is why we use position sizing. So 2% on a sample $20,000 account. You can do smaller accounts if you want to set up in NinjaTrader. That's absolutely fine in our MT Predictor settings. Would have meant going short 4 contracts. It then turned around and then stopped you out. That means it would have been a losing trade, but it would have been a -1 hour loss. So that loss would have been -1 risk unit. That's what happens when the market starts to go random and breaks down. But do you see how this is important? Is that it's not avoiding the loss, it's keeping the loss at -1 hour, because your previous profit back here was 5 hour, was 5 times greater than the loss. So can you see how overall you'd have had 1 profit, 1 loss, but the profit at 5 times greater than the loss would have actually given you money overall. That's what we're looking at in MT Predictor, small losses and large profits. But again, do you see how this was absolutely picture perfect in the way the reversal happened at the higher time frame resistance, the market trend then turned clear, you then got a good trade set up, and then it's actually probably a better example because it shows you how later in the day the market pattern then turned random, and then that gave you a losing trade and the market not working out as you'd anticipate. But that doesn't matter because you've had your nice profit earlier in the day anyway. Let's have a look what happened yesterday then, because if I go back out to the 15-minute chart, we'll just stick with this one the same, clear everything off. As the market was rallying up here, we then take off the last swing high. So we go off this last swing high to then do the decision point. That was our decision point level. If we came down to the 3-minute chart, these sell setups were nowhere near this resistance level. Therefore, you shouldn't be taking them, should you? We're nowhere near this resistance level, even though the MTP trend was red. These were not ones you should even be considering because you were not at higher time frame resistance. Does that make sense? The question that you could ask yourselves is on this one here. This one here wasn't quite at the DP level. It was a tick short. So what do you do here? Because if you had have taken this one, this would have been a profitable trade for almost 3-hour profit. If you had have taken it, you'd then probably have considered this one to be valid as well. Now this one would have been a -1 hour loss. So you would have had a profit larger than the loss, and it would have been okay. But technically, the market didn't reach the DP level until much later in the day. So this is one of those times where it's how far do you push yourself compared to being conservative when you're trading the MT predictor trade setups. In other words, would you want to sit aside and say that this one and this one were not ideal because it hadn't reached the level here? Or would you then say, well, you know, that was close enough? Well, this is a decision for you to make. And, you know, as you become more experienced, you can then decide on what you want to do. My advice would be is if you're new to MT Predictor, I'd only trade the ideal setups. Make sure it's as good as it should be. So you'd probably want to be avoiding setups like this. If you're more experienced, this is the time when you might look at this and say, well, this is not ideal, but I like the idea of this setup. Therefore, I've got to be willing to perhaps take a trading loss on it. So it's all about how experienced you are and how aggressive you are in the markets and how much you want to push the ideal setups. Again, there's no fixed answer to that because every single one of you is different. Every single one of you has a different risk profile. Every single one of you, you know, is more aggressive, is different experience with MT Predictor. Every single one of you is different. I don't want to put you all in the same box or the same pigeonhole. I don't think that's fair. But can you see how you can develop your own strategy as you become more experienced? So are there any questions on that so far? Again, I can only see half the question, which is very frustrating from my point of view here. So I do apologize about that. So we'll send that to support to try and see why they suggest that's not working. And perhaps while we look at that, I'll just nip back to our standalone version. Just have a look at some Forex examples because here's an example I was looking at. Was it last week on the Japanese yen? Exactly the same kind of thing. Where here we have the weekly resistance, the initial move down, an ABC correction up into a W3 trade setup here. We don't know what this is going to do. We don't know whether this is going to be a losing trade. We don't know whether it's going to be a 12-hour profit. All we know at this point in time, it looks to be a good trade setup. And that's the one thing you must understand is you can't know in advance what the markets are doing. You can't say, well, actually, you know, from this, I know the market's going down. All you know is that if it goes up and you're in this trade, you'll be stopped out for a -1 hour loss. If it goes down, you could have a potential 12-hour profit. And that's the only thing we can control when we're trading is our entry and our initial stop. Right. Are there any questions from anyone in the last couple of minutes? I might well end this webinar just a little bit early because I'm having a few technical issues with the questions, and it's very frustrating from my perspective. I can't see the total question because I want to make sure that I'm doing the best for you guys and answering the questions you need. So hope you've enjoyed seeing a basic review of what we're looking to do with MT Predictor. In other words, when you're new to MT Predictor, this is effectively what we're doing is we're looking to go to the higher time frame. That's sort of step one. Whoops, that was a weekly chart, the higher time frame. We then place our DPs on the higher time frame chart. We then look to see whether the market is making a reversal at those levels. If it's not, we deem the market pattern is unclear. We then wait for it to become clear on a future swings, or we go to another market, another time frame. If it is clear and it's making a reversal, we then come down to the time frame we're looking to trade off. That's when we can look at the MTP trend setting or color to see whether it's agreeing with our DP reversal. Again, the DP's first, MTP trend second. So here it was blue up into the high, black as it was making a reversal, and red as the market trend was down. We then look to take trade setups that are in that trend direction as step two. So step one is the higher time frame DPs. Step two is trade in that direction of the new higher time frame large degree trend. If we're wrong, we get stopped out with the -1 hour loss. If we're right, we hope over time we have profits that are large in relation to the initial risks. And this is exactly the same approach we use on all markets, all timeframes. Here you can say we're looking at a daily Forex chart on gold and crude, particularly those the crude ones. We were looking at hourly charts with 15-minute trade entries, weren't we? And then on the E-minis, on the E-minis, we were looking at 15-minute DPs with 3-minute trade setups. So different markets, different combinations of timeframes, but the timeframes between which you're looking at are between 3 and 5 timeframes between each other, if you're with me. So on a 3-minute chart, your 15-minute would be your higher time frame. On a 15-minute chart, your hourly would be the higher time frame. If you're looking at dailies, your weekly would be the higher time frame. So hopefully that makes sense. And when you're new to MT Predictor, look to only trade like we saw on this one here when it's absolutely ideal. If we go back and put that first DP on, like that, what you're looking for is when it's ideal. As when the reversal happens at the higher time frame DP, right in the DP level, that then means the picture's clear. As you become more experienced, you could probably push the boundary ever so slightly, but not this far. You know, these ones would not be good trades to take, even though our MTP trend is red. That's why it's dangerous when you first use MT Predictor and you don't come into these training webinars, because you can look at these and say, our MTP trend is red. Here's some sell setups. Let's take these. Oops, they're losing. But can you see why they're losing? They're losing ones because we hadn't reached this next 15-minute resistance. That's why it's important to go to the DPs on the higher time frame first. That's your step one. Everything is about seeing the higher time frame support and resistance zones, and that couches your large degree trend direction. And from that, then you can only come down to the shorter time frame to look to gauge your trades in that shorter time frame direction. So hopefully that makes sense. Right. If there aren't any more questions, and I think I'm struggling to see them if there are any ones anyway. So if there are any additional questions that I've missed because I could only read half of the question, which I apologise for again, please do send me an email, direct email, steve@mtpredictor.com, or if it's more a generic question, you can send our support team, support@mtpredictor.com, an email as well. But otherwise, hopefully it's been a good webinar today, reviewing some trade setups. Again, we use the same approach, different markets and different time frame combinations. We do the same again and again and again. That's what successful trading is about repeatability. It's about doing the same today as yesterday, as we'll do tomorrow, as last week, as we'll do next week, as we did last year. It's all about repeatability. Having algorithms that evolve or change with the market is like trying to play football with a moving goalpost. You know, you're never going to get any consistency. So that's what we're trying to do with MT Predictor anyway. Right, so I'm going to end the webinar there. So again, I apologize about the technical issues on the questions. I hope they'll get that sorted before the next webinar. But otherwise, have a good trading week, everybody. And we'll be probably back all next week to do it all again. I'll let you know whether or not, because it's half term in the UK here next week. So I might well have a couple of days off and actually not have a training webinar next week. I'll make the decision a bit nearer the time. So I'll send you all an email anyway to let you know whether there's going to be a webinar or not. If there isn't, we'll be back in 2 weeks' time. If there is, we'll be back in a week's time. So have a good trading week or a good trading 2 weeks. And if there are any other questions I've missed, do send me an email, steve@mtpredictor.com. Right. Bye for now, everybody. And either a week or 2 weeks' time, we'll be back to do it all again.